Hi, this is your market update for July 15th. Interest rates in Canada remain relatively low. 5-year bonds right now are about 1.53%. Let's take a look at the market.
So let's take a look at the S&P 500, the American broad stock market index. You can see that here's that correction we had at the end of last year. And there's a lesson here for investors is that never leave the market. We had a very rapid retracement from that pullback, and the market basically pulled back a bit again in May and then went on to this new high. This happened last Friday. The S&P went over 3,000. I will say that not all sectors were participating in it, in that rally, but it was certainly combined enough to send the S&P over 3,000. I'd say conditions look reasonably good for the economy in the US with low interest rates and low unemployment. Here in Canada, the longer chart looks a little more volatile, and that's because the Canadian economy has fewer sectors than the American one. It's a much broader market in the US. Here in Canada, we're energy, mining, and everything else. You can see that the correction here in Canada got underway more around July, August last year, and then really came off with the American market. But the same retracement right back up very quickly at the beginning of the year, some weakness in around May. And here's where we are today at about 16.5 on the TSX index in Canada. When we put all this together, you can see the S&P 500 in the United States is currently up about 20%, 20.22% year to date. But remember, that doesn't include that correction last year. So when we look at 12-month trailing numbers, the S&P is up about 7.7% for the last 12 months. And likewise in Canada, when we look at the TSX, it's up 15.12% year to date, but on a 12-month basis is down about just around half a point. So it's not doing as well as the US. The Canadian market overall, I'd say, hasn't been the greatest market for growth when I'm talking about the index as a whole, but it's sure been great for income.
So as a summary, we have low interest rates, we have low unemployment, market continues to move along. One thing I'll be watching for in the next quarterly earnings is whether we see an impact on earnings from the trade war between the United States and China, which I suspect could cause some chop in the market. That's our market update. If you have any questions, please give us a call.